Hey everyone, Roku reported quarterly earnings results after the markets closed on April 25th. That sent the stock price down roughly 10% after the announcement. Understandably, investors are asking if Roku stock is now a buy on the dip. I'll answer that question in this video. I'll also review Roku's latest quarterly earnings results and update that recommendation I had on Roku stock. Remember, coming into the quarter, I did not have Roku stock rated as a buy. I have not had Roku stock rated as a buy for some time now, given the company's losses on the bottom line and the relatively expensive valuation. So you're going to want to see if I'm changing that recommendation and upgrading Roku stock. So let's jump into the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Roku telling investors that it remains the number one selling TV operating system in the US and Mexico, and they continue to expand their retail distribution. And if you've used several different TVs with different operating systems like I have, you may have the same experience where Roku is by far the best operating system. It's not only number one in my opinion, but number two is probably so far behind. The system just works so much better. It's more intuitive and it's more aligned with the user experience when you're watching TV, at least in my opinion. And it looks like it's the opinion of many in the US and Mexico, as it is the number one selling operating system. Now, the company also achieved positive adjusted EBITDA and free cash flow for the third consecutive quarter. Now, I always take adjusted EBITDA with a grain of salt. EBITDA is already an adjusted number. It's earnings before interest, taxes, depreciation, amortization. And then you're taking that number, which is already excluding 4 different expense lines, and adjusting it even further. So adjusting an already significantly adjusted number. I don't like adjusted EBITDA as a financial metric to consider. Free cash flow, however, is one that I highly value. And Roku has free cash flow for the third consecutive quarter. That's great news. That I find more valuable than the adjusted EBITDA. Total net revenue of $882 million was up 19% year over year. And I'm going to talk a little bit more a little later on why that was so impressive. Streaming households of 81.6 million was an increase of 1.6 million from the previous quarter. From the previous year in the same quarter, it was up by more than 10 or roughly 10 million. So they are adding millions of households to their devices, to their network, to their ecosystem, which is critical for the success of Roku, to get people into their ecosystem, watching TV, watching or streaming content through a Roku enabled device, whether it be through a Roku operating system or a Roku TV stick, or now a Roku enabled TV, as they started manufacturing their own TVs, which I will also talk about a little bit later. Overall, streaming hours were up by 5.7 billion year over year to 30.8 billion. That's great news. People are watching more content on the Roku platform, of course helped by 10 million more people on the Roku platform, but also more engagement from each one of those individuals, and the Roku channel, which is now becoming extremely popular. The Roku channel is free for everybody with the Roku enabled operating system. So if you don't want to pay for any streaming content and you just want to watch free stuff, the Roku channel is now an attractive option for folks as they are becoming more popular. So I highlighted why it was more impressive this quarter, the revenue growth, and it's because they decreased their spending. So look in the most recent quarter here on the tab labeled Q1 2024. Look down the item here and look at total operating expenses, and you could see total operating expenses of 460 million was down 16% from the same quarter last year. This year they had 460 million in Q1 24 of operating expense. Last year they had 550 million. Notably, they spent 14% less on sales and marketing and still increased revenue by 19% year over year. You've probably heard me say this before, but when a company increases revenue while simultaneously decreasing spending on sales and marketing, that's even more impressive because that demonstrates organic demand for your product or service. If you're spending money on advertising and incentives and promotions, it's more easy to make sales because you're incentivizing consumers to buy. You're giving them lower prices, you're giving them rebates, other incentives to purchase. But when you're pulling back and then they're still buying more, that means your product is just highly sought after, which is what Roku demonstrated in this quarter. That's what I liked about this quarter's performance specifically. Now, for the next quarter, Roku is forecasting 935 million in net revenue and 410 million in gross profit. If you compare with the current quarter, that would have been an increase from 881 million of total net revenue and 388 million of total gross profit. So they're making an expansion quarter over quarter and also year over year. Q2 2023, they had 847 million in revenue. So if they delivered 935, that's going to be significantly higher. And then they had 378 million in gross profit. So 410 million would be higher than that time period as well. So progress being made, to be sure. Now here's the segment that I wanted to hear more about from Roku, and they delivered here in that their TV manufacturing, how that's going, what progress have they made. And in January, they announced the Roku Pro Series, expanding their lineup of Roku branded TVs, designed, made, and sold by Roku. And their new higher performing TVs come with advanced features, including Roku Smart Picture Max, which uses artificial intelligence. All right. Roku almost went 2 pages into their earnings release without mentioning artificial intelligence, which is a no-no nowadays. Every company must invent a way to bring in artificial intelligence into the conversation. The sooner you bring it into the conversation and the more often you mention artificial intelligence, it seems like the more points you get in this imaginary game of who can say artificial intelligence more often. Anyways, so it uses AI to automatically optimize brightness and colors and select the best picture mode for the viewer. Roku Soundstage Audio, which projects sound out and around the viewer through new side-firing speakers. I like this feature. The audio enhancements and the TV picture mode for viewer. These are cool features that enhance the viewing experience, and I think customers are going to like this feature. I don't know if they're going to buy just because of this, but it certainly adds value to an already popular operating system for Roku. Here's what's more valuable, that their TVs are now available at Best Buy, Amazon, and Walmart, 3 of the largest TV retailers in the world. So it's great news that they're getting distribution from these large distributors and getting access to these distribution channels. Now, I'm a little curious how competition is going to respond to Roku's market expansion here. So far, I haven't seen any big decisions from competitors and rivals and other companies, even partners like Netflix and others, due to Roku's expansionary ambitions, especially if Roku is launching its own Roku channel with free advertising supported viewing. That's now a competitor to, Netflix and others, because viewing time is going to go to those new areas. And I don't know how competition is going to respond. I know if I was Netflix and if I was other streaming providers, I would be taking notice of Roku's expansionary ambitions and being a little bit more careful with my relationship with Roku. I would be a little bit more cautious with my relationship with Roku. It's good news for Roku and Roku stock investors as Roku is building out its business, it's building out its negotiating power, it's building out its competitive advantages. It's arguably competing against some of these companies that it now partners with. So I'm going to be watching that to see how rivals respond. And if they don't respond, then that's good news for Roku. After the earnings came out, Roku stock price is down 10.24%. Roku's now trading at a price to free cash flow of 46, which is significantly lower than it's been trading at according to this metric. And management did say that they expect to continue expanding their cash flow over the years. Now, I highlighted that coming into the quarter, I did not have Roku stock rated as a buy. I last updated Roku on April 8th, where I told investors it was still not a buy. However, after reviewing their latest report, I'm upgrading Roku stock, not cleanly to a buy, but I'm putting it on the borderline buy. I'm upgrading it one notch to borderline buy. I wouldn't be surprised if over the coming weeks I don't upgrade it completely to a buy. If the stock price especially goes lower in that time, I would certainly upgrade to a buy. If the price to free cash flow, for instance, were to fall below 40, that would probably have me raising it to a buy outright instead of a borderline buy. So an overall very good quarter from Roku. As an investor, I liked what I saw from Roku, and that caused me to upgrade to a borderline buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.